Hello, guys, and good morning, and welcome to your market report for Thursday, June 21st, 2018. Welcome to the show. Now, first thing we're going to do is we're going to start the charts right here, and we're going to look at silver price today. Today, what we're seeing is right in range, the silver price, and it's at the lower side of the lower range. The lower range is like in the $16, and the upper range is in the $17 area. It's like 17. It hasn't been in the upper range, just touched it for a moment a couple days ago, and now it's slid back down into the lower range. It's kind of a depressing market, but it's really a good time for everyone to accumulate, if you possibly can, some of this when it's at these prices. Because we're going to see a massive increase in the silver price coming up in the next 5 years. It's going to be massive, absolutely massive. And if people that missed out on this, it's going to be like missing out on Bitcoin when Bitcoin was cheap. Now, what is Bitcoin doing today? Well, Bitcoin at Bitstamp is 67.16. And it's, if you see right here, this low it made at 61.20. Well, it's been very slowly, but albeit very slowly climbing up from that low. But I think the tendency is it's going to fall off. And I think it's just about ready to do it and make a new low. And where will it make that new low? Well, I think it's going to be slightly lower than the 61.20 even. Now, that's what I'm kind of expecting. Now, don't take that as financial advice, because, I mean, I could be wrong on that. Bitcoin is such an unpredictable market. But the reason why I'm saying that, I'm going to show you right here. Now, in the short term here, we made this low at 61.20, and now we've bounced back up to 67.12 this morning. If we go here to the 12 hours, now you're going to see why I'm saying this. Ever since it made this peak at 19,666, it's been in the bear market with lower lows and lower highs. And we see that it's nothing unusual here. It's getting ready to, okay, we had a bounce down, another bounce down, another bounce down, and we're getting ready for the next bounce down right here. You can see it. I mean, it's pretty obvious on the charts, right? I'd be awfully surprised if we got some sort of explosion to the upside right now in this bear market. I mean, it would be a total shocker to me. But it wouldn't be a shocker at all if we made a new low, probably somewhere below this low right here even. This low is at 59.54. I wouldn't be surprised if we seen a new low at 5,200 or 5,400 or something like that. Really, to tell you the truth, when this slides right here. And it looks to me like it's just about ready to start sliding. I mean, it's just a no-brainer. We're not out of this bear market, I don't think, yet. We got to make these lows before we're going to get out of this bear market. This is typical behavior, you know, of how things function in markets in a pattern. This is following a pattern. It's repeated this pattern like 9 times in the past. Bitcoin, albeit a lesser price. This is just a bigger version of a smaller pattern that was repeated like 9 times in the past with Bitcoin. And it's just doing the same thing over and over again. So it's very, very predictable what it's going to do, basically, pretty much. It is unpredictable, but still, to me, I think that's what it's going to do. That's my opinion. So 65.51 for crude oil today. She's down 20 cents on the day. That's 0.30%. Crude oil is, I think, I don't think it's going to go a whole lot lower than this. And that being said, I don't think it's going to get much higher than this peak of 72.48. So I think we're looking at the price stabilizing in somewhere around probably 65, 66 bucks along in there, and going sideways for the next little while. Now the Dow Jones, this is exactly what it's been doing. It's been going sideways ever since the February 8th. It's been going sideways. And cryptocurrency market capitalizations. We're going to take a look at that. $286 billion. Oh, the Dow Jones. Let's go back to the Dow Jones. It's down 164 points today. You know, maybe I moved off of it too fast. It's down 0.67%. It's been a little bit bearish the last few days. It reached this high of 25,332. You know, and ever since then, it's been a little bit of a bearish market. A little bit bearish, like just recently. But I don't expect it to go below 23,000 because there's support at 23,000. Not in the short term. Now, looking out a couple months down the road, I'm expecting this market to crash. I have been expecting it for quite a while. It's only going to go sideways so long before she crashes. And the reason why is the bond market. The bond market's going to take off again. That's what's going to cause it to crash. This market here to crash. Now let's take a look at back at cryptocurrency market capitalizations. I'm sorry I got ahead of myself, guys. We're on the cryptocurrency market capitalizations now. $286 billion. Bitcoin dominance at 40.1%. So Bitcoin dominance has got a little bit of strength there right now. And we're looking at all the coins are down a little bit today. Litecoin is $96.57. Let's see if we can find any good bargains here, ones that are down a lot. Neo's down quite a little bit, $37.85. Neo is like the Chinese Ethereum. I think that's what it's like, you know, anyway. Binance coin is up. There's a few of them down here that are up. Ethereum Classic is really up today, 5.23%. Isn't that something? I wouldn't buy Ethereum Classic then if it's up like that. You don't want to buy them when they're up. You want to buy them when they're down. That's when you want to buy them. Like silver right now. Silver's not up, it's down. It's so bearish, it's unbelievable. That's the time to accumulate. Bonds and rates. Now the bonds and rates today are falling bond yields. We got falling bond yields, and that's almost unbelievable, but that's going to end come the end of this month when the Fed goes back to their quantitative tightening again and they increase it. I expected these to turn around. I expect the U.S. 10-year to actually exceed 3.1% on the U.S. 10-year, to exceed that next month. So it's at 2.89. Now, it went up to 3.1% there, but didn't stay there real long. And it come back down again. And that's because everybody's chasing yield right now, and there was enough buyers to bring it back down into the 2. I think they brought it back down almost to 2.7 or something like that. Well, let's just take a look and see what they brought it back down to real quick here. They brought it back down to what? 2.74% on the U.S. 10-year. Right in here, about 2.74%. Now it's bounced back a little bit to 2.89. Well, here, if we take a look at this chart, here's where they began quantitative tightening, right here. And the quantitative tightening caused this big spike up in bond yields. And basically, we've been going sideways ever since. But they've been increasing the quantitative tightening. So we're ready for a burst of that energy that they've put into the system from quantitative tightening. We're ready for a burst. The cumulative effect is ready to really a breakout in these bond prices. Probably going to exceed 3.25% because of that stored energy. It was going up nicely, according to what it should do, all the way October, November, December, and January, February, March. It was ascending up nicely, right? And then look, all of a sudden, since March, the middle of February actually, it hasn't went nowhere. It's just went sideways, the bond yields, and they've been increasing the tightening since then. They've been tightening harder and harder and harder, and the bond yields haven't went anywhere. And the only reason why is we found a lot of buyers. We found a lot of people that are moving into bonds, and this is the thing. But this is, as they continue to increase this pressure, the same pressure that caused this uptick, it's going to turn right around and bite them in the end. And when that happens, I think it's going to snap fast because it's building up a lot of pressure under it. Now, U.S. dollar index, 94.90. She's down a little bit on the day. She was up around 95. Anyway, so that's what's going on in the markets today. Listen, thank you guys for tuning in, and we'll catch you on Friday. Bye-bye for now.